Good day, Junior Tickies. I'm Mrs. Brimacombe. In this activity, we are going to focus on return financial indicators related to companies. We ask the questions, are the shareholders getting a fair return? So a summary of all the financial indicators that we are going to look at is number 1, the return on the shareholders' equity, earnings per share, dividends per share, dividend payout policy, net asset value, the market price, dividends yield, and earnings yield. So these are new financial indicators that you're doing for the first time in grade 12. When we're looking at return on shareholders' equity, it is very important to understand that your shareholders' equity consists out of your ordinary share capital and your retained income. So when we calculate what is the return on the shareholders' equity, we have to take the net profit after tax and we divide it by the average shareholders' equity. When we're looking at average, it's always the beginning plus end divided by 2. The return on shareholders' equity is always compared to alternative investments. And when we talk about alternative investments, we talk about an investment in a fixed deposit. So if you ask the question, is 7%, 8%, 12%, is that a good return? What do we compare it with? With alternative investments. Earnings per share is my net profit after tax expressed in amount per share. So when we're calculating our earnings per share, we have to take the net profit after tax, which we will get in our income statement as well as in the retained income note, and we have to divide it by the number of shares in issue. Where can I find the number of shares in issue? In my ordinary share capital note as well. Make sure that you know at all times what is the number of shares in issue. This must be expressed in cents. Dividends per share is my earnings distributed to a shareholder as dividends. Dividends on ordinary shares always consist out of your interim dividend plus the final dividend recommended. Looking at our calculation, it's divided by the number of shares in issue. Again, it is very important that you know throughout the accounting period what is the number of shares in issue. And then secondly, when shares are repurchased or shares are issued to the public, you need to make sure that you know, will the shareholders qualify for dividends or not. Dividend payout policy. This tells us what percentage of the earnings is being retained and what percentage is being paid out in dividends. So when we're looking at our calculation, it's the dividends per share divided by the earnings per share. A company does not need to pay out all their profits in dividends. They can decide that they actually want to retain some of that money for future growth. This will, in future, in the long term, it will benefit the shareholders. As the price per share will increase, so this means when you as a shareholder decide to sell your shares later, you will get more money for that share because it will be worth more. The net asset value tells us what is the true value per share. So when we look at the net asset value, we take the shareholders' equity, which consists out of your ordinary share capital plus your retained income, and we divide it by the number of shares. Your net asset value is always compared with the market price. These two are BFFs. So if we look at the net asset value and the market price is higher than the net asset value, this indicates a high demand. But when the market price is lower than the net asset value, it indicates a low demand for the shares. When we're looking at our dividend yields, this indicates the percentage of a company's share price it pays out in dividends each year. If you're looking at your calculation, this means we need to take the dividends per share divided by the market price, and your answer should be in a percentage. A high dividend yield indicates that a company paid out a high amount in dividends. A low dividend yield indicates that a company paid out less dividends and rather retained funds for future growth. A company can decide to also keep funds to pay off debts. It doesn't need to be we're keeping funds for future growth or we want to expand. They can also decide they would rather pay off their debt. Earnings yield. This indicates the percentage earnings of a company's earnings per share. We take the earnings per share and we divide it by the market price. How do investors feel about the future growth? Activity 4. You are presented with the financial information of Galaxy Limited for the year ended 28 February. The company has an authorized share capital of 1 million ordinary shares. So authorized means the maximum. So required, calculate the return on shareholders' equity, earnings per share, dividends per share, net asset value, the earnings yield for 2022, dividends yield for 2022, and then we need to comment on the findings of above. See information B for corresponding figures from the previous year. When we're looking at financial indicators, a reminder, we compare last year's figures with this year. We indicate the trend. In other words, was there an increase or was there a decrease? And then we provide our opinion. Looking at the information A, the figures were extracted from the financial statement, and information B, they provided us with the financial indicators. Question 1, calculate the return on shareholders' equity. We have to take the net profit after tax divided by the average shareholders' equity. So if you look at the information presented, they provided us with the net profit before tax and they've given us the income tax. This means we need to calculate the net profit after tax. Looking at our shareholders' equity, it consists out of retained income plus ordinary share capital. So we have to add the retained income plus the ordinary share capital for 2022 and for 2021. My total return on shareholders' equity for this accounting period is 11.8%. It must be in percentage. Earnings per share is the net profit after tax divided by the number of shares. The net profit after tax we've calculated now in the first question. The number of shares at the end of the year is 680,000. So we take the net profit after tax divided by the number of shares. Take note, it's times 100 cents. So your answer must be in cents. 62.9 cents. To calculate the dividends per share, we need to take the dividends on ordinary shares divided by the number of shares. Again, it's times 100 cents. So my answer is 50 cents. To calculate the net asset value, so in other words, what the shares are actually worth, we have to take the ordinary share capital the ordinary share capital plus the retained income equals your shareholders' equity divided by the number of shares. Again, it is times 100 cents, so that equals 602.2 cents. To calculate the earnings yield for 2022, it's my earnings per share divided by the market price. We have calculated our earnings per share for 2022 divided by the market price times 100, and your answer should be in percentage. To calculate the dividends yield for 2022, it's your dividends per share divided by the market price times 100. Your answer is in percentage. The dividends per share was calculated 50 cents. The market price is 900 cents. So 50 divided by 900 times 100 is 5.6%. In question 7, we now need to comment on the findings above. So make sure that you calculate all of those financial indicators and you use your answers correctly. And what do I mean by using it correctly? When we're commenting, as I've said right in the beginning, we have to compare last year with this year. We indicate the trend. In other words, was there an increase or a decrease? And then I provide a comment-opinion on that. If you look at your shareholders' equity, what happened from last year to this year? It decreased from 15% to 11.8%. So although the return on shareholders' equity decreased, this is still better than alternative investments like a fixed deposit. If we're looking at the earnings per share and the earnings yield, the earnings per share increased from 60 cents to 62.9 cents. So in other words, by 4.8%. How do we get that percentage? We take the difference divided by 2021 figure and then we times it by 100. Looking at the earnings per share as a percentage on the market price, what happened with it? It decreased from 8.6% to 7%. Sorry, my apologies for that. It decreased from 8.6% to 7% in 2022. Before we continue, I want you to take note. Yes, the earnings per share did slightly increase, but when we look at the earnings per share on the market price, it actually shows a percentage decrease. Dividends per share, it increased from 25 cents to 50 cents. So it actually increased by 100%. When we're looking at the dividends per share as a percentage on the market price, what happened? It increased from 3.5% to 5.6%. In general, the dividend yield of 2 to 4% are considered strong. This is to be considered then great, but this could also be a risky one. When we're looking now at the dividend payout rate, now remember the dividend payout rate means how many or what percentage did we retain and what percentage of the earnings did we pay out in dividends. So we have to take our earnings per share divided by, the dividends per share divided by the earnings times 100. So we need to look at, if we look at 2022, the dividend payout was 79.5%. If we compare this to 2021, you could see that the company paid out more in dividends. So if they paid out more in dividends, it means that the company decided to retain less funds. In 2022, the company retained only 20.5% of the earnings compared to 58.3% in 2021. If you take 100 minus 79.5, that equals the 20.5%. Commenting on the net asset value, we're going to compare the net asset value with from last year to this year, what happened. So if I have a look at last year, the net asset value was 500 cents, which means that there was an increase from 500 cents to 602.2 cents in 2022. So it increased by 20.4%. The market price, if we're now looking at the market price, what happened to the market price? It increased from 700 cents to 900 cents. In other words, there was an increase by 200 cents, which is equivalent to 28.6%. If we now compare the market price with the net asset value, for both 2021 and 2022, the market price was more than what the shares are actually worth. This means that there's a demand from investors to buy shares in the company. Looking at this activity, this was a basic activity to explain the return financial indicators. In our next activity, we're going to focus more on these indicators. Thank you very much. I want to leave you with this quote. Teachers can open the door, but you must enter it yourself.